Okay, so we are going to just finish up with the list of documents if you're going to be doing a corporation for your project. And let's talk about letter C right here, D and E. Minutes of the first meeting of the Board of Directors, subscription to stock form, and a call by the incorporator form. So the minutes are on page 58. Right here. And again, I also have this form on our Canvas page in Word format if you want to type it up yourself. So basically, minutes are a record of what happened at a Board of Directors meeting or at a shareholders meeting. Usually it's both, a shareholder and Board of Directors at the same time. And minutes are required to be kept to document the actions and voting that take place during those kind of meetings. And the idea of minutes is, one, to create a historical record of what was discussed, who voted on what, who was present, and all of those kind of things. Meetings are required to be done at the beginning when a corporation is first formed, and that's what this set of minutes are. Minutes of the very first meeting of the first Board of Directors meeting ever, because it's a new company. But in addition to this, and I don't have this form in my materials, but if you have a corporation, every year by law you are required to have an annual meeting of the Board of Directors. Now usually in a bigger company you'll have meetings quarterly or monthly or whenever you want for that matter, but at least once a year you have to have a meeting of the Board of Directors for purposes of electing the president, the vice president, the secretary, treasurer, and other officers, and approving actions of the corporation during the year. So back to this form of minutes. These are minutes that you would adopt, which set out the basic initial requirements to get the company set up. So I'll just work my way through. There are more in the real world that we often will include, but essentially works like this. You have when the meeting is held, who was present, who was named chairman of the meeting, that the company has been filed with the Secretary of State, and the date. And then the first discussion in this particular set of minutes is this particular corporation is going to elect to be what's an S corporation. And so this gives approval for the officers of the corporation to file the necessary paperwork with the IRS to become an S corporation, and that's a Form 2553, which we'll talk about in a moment. If you keep going through the minutes here, we have additional resolutions. So we're here where it says resolved. That is a resolution. A resolution is when authority is granted by the Board of Directors to officers, employees, managers, whoever, to do certain type of actions on behalf of the corporation. And a resolution is required for any major corporate action. That would include things like setting up a checking account, if you're going to get a loan, if you're going to enter into a lease agreement for renting an office building or whatever, if you're going to purchase property, those all will require some form of corporate approval. Typically a bank will ask for that, or a title company for a real estate transaction. A landlord may require a copy of a resolution. So anytime there's a Board of Directors vote and you're giving authority, say, to the president or to a manager to do something like open a credit card, you have to have a corporate resolution, which is a written approval for that specific action. So in the first meeting of Board of Directors, you're going to have a number of these resolutions, and the minutes are where we're going to find those. Sometimes a bank will require a separate corporate authorization form. Often banks will have their own form that they want you to use when you're setting up a corporate checking account. And it's in the form of a resolution. It's a pre-printed form that they have internally. So if you look, we look our way through here. So here's the resolution. The corporation's going to issue 100 shares of stock, which is the initial subscription to stock. $10 per share for $1,000, and this is the person that's going to buy it. You know, we may have more than one owner, so you list all the initial shareholders and how much money they're paying to buy into the corporation. Usually that's the amount that it takes to set up the company, and we'll deposit that with the corporate checking account. Down below here, it talks about the bylaws. The bylaws are adopted as a corporate resolution. Next page over, this is where the officers are appointed by the board of directors. In this case, it's a president, vice president, and the secretary and treasurer office has been merged, so it'll be the same person. Now, if this is a single member corporation, it's going to be the same person in all three roles, but you may have different people there. Oftentimes, you'll just leave the office of the vice president vacant. Next resolution, stock subscription agreement, which is a contract to issue the shares of stock, which is a different form I'll show you in a moment. And then here's a resolution that authorizes a bank, Columbia Bank or Umpqua or whatever, to open a corporate checking account. And again, the bank is going to want to see that. And this will say who will be the authorized signers on the corporate checking account. Sometimes you may have restrictions on the ability to write checks. So perhaps you want a situation where if there's going to be a check written for more than, let's say, $5,000, you might want to require two signatures, the signature of the president and the treasurer. And that's where you would put those kind of restrictions on the ability to write checks, or when they require two signatures to be approved, certain dollar amounts. I don't have that in this particular form, but that's where you would commonly see those kind of things. Next page over. In this case, we're going to have a fiscal year which will match the calendar year. A fiscal year is your accounting year. Typically in an S corporation, your fiscal year will be the calendar year, January 1 through December 31. But it's often common to have a different fiscal year, especially in farming or other seasonal type businesses. So maybe you want to have a September 1st through August 31st year, so it matches the type of crops you grow. That way, if you're a farmer, all of your expenses, for seed and fertilizer and fuel are all in the same accounting year as the income once you sell your crop. Schools often adopt, like Western and Central School District, July 1 through June 30th as a fiscal year. And the reason for that is that way you have all summer term, fall, winter, and spring term all in one accounting year. So there are various reasons to have different fiscal years, but this is where you would make that resolution. Here's another resolution that's pretty common in a small business, and that's for reimbursement for the use of your private automobile. That way, if you're using your car or whatever, you can deduct those miles at the IRS rate. I think it's 58 cents a mile, which probably will go up with fuel prices. In this case, next resolution, this is authorizing entry into a lease for an office building or whatever type of real estate the corporation may lease. This next one here is authorization, in this case, to enter into any loans that may be necessary with a maximum dollar amount. Here I put $500,000, but perhaps you're going to get a loan to buy equipment for your farm or your restaurant or whatever. The lender is going to require a corporate resolution to authorize the corporation to enter into that loan. This next one's a common one. This authorizes the president and the secretary treasurer to get a corporate credit card. And again, your credit card company is going to want to have a copy of this resolution in their file. And the reason why, if action is taken by a corporation that's not part of a corporate resolution and approval from the board of directors, then that action can be overturned. It's not a valid action. And so that's why we have these corporate resolutions. And then this last one is authorization to sign checks. So you may have other type of resolutions depending on your type of business and what you're going to be doing. If you're going to be going into a restaurant or a bar where you have to have a license, like from the Oregon Liquor Control Commission, that might be another type of resolution. Authorizing, applying for a liquor license, food servers permit, those kind of things. So it just depends on the type of business you're going to be doing. And again, every year when you have an annual meeting, you're going to have similar minutes that will be taken that are similar to these, authorizing past activity and future activity and electing the officers. All right, this next page, 63, this is another form for the setup of a corporation, and this is a subscription to stock form. And just basically, this is a form whenever you issue shares of stock in a corporation, you have to, it's basically a contract for the sale of the stock. Now, in a small company, it's a formality. It's more important when you have a larger type company. But one of the most important things here at the bottom is an acknowledgement that the purchaser of the shares of stock is acknowledging that the stock is going to be what's called privately held. It's not going to be publicly traded. There are a lot of rules involving publicly trading stock with the Securities Exchange Commission. And so stock will not be registered as a publicly tradable security. And that's a restriction on the type of stock that can be issued. That way you don't have to go through the formal registration process, which is very difficult. And then, forgot page 57, forgot this form. Call by the incorporator of the first meeting of the board of directors. This is a form to announce to the public that there will be, there's a new corporation and you're going to be having the first meeting of the board of directors. Now in a small company, if it's just you or you and another owner, it's not a big deal. It's a mere formality. But if it's going to be a bigger company, especially if it's publicly traded, you have to publish notice. Typically that's done in a newspaper of the first meeting to make it a public notification that there will be a board of directors meeting. And if you don't, that can invalidate the whole meeting. So not so critical in a small business, but in a medium or large business, it's much more critical. So those are basically the forms I want you to use if you're going to do a corporation in your project. And then the final form for a corporation is 2553 form. It's on page 34. Okay. So this is a form 2553. Election by a small business corporation. So this is a form if you want to be an S corporation, not subject to corporate tax. You have to file this form with the Internal Revenue Service within 75 days of when you start the business. Or if you want to convert to an S corporation, you would file it afterwards. And essentially this is going to set forth the information about the corporation, calendar versus fiscal year. And on page 2, it's really the most important part. This is where all of the shareholders in an S corporation have to sign. And this is a form of consent of the shareholders agreeing to be an S corporation. Part of that is you have to list the number or percentage of ownership when they acquired the shares of stock, social security number or tax ID number or employer ID number. And that way the IRS knows who are the shareholders in the corporation. Also, along with that, if you're an S corporation, there are certain types of shareholders that are not permissible. You cannot have another corporation, for example, own shares of stock in an S corporation. It has to be a real person, not an entity. Otherwise, you cannot be an S corp. You don't qualify. And so, and there's some other restrictions as well. But this is where you set that all out. For you guys, just put your whatever name you're using. But this is a very important form. If you don't file this form, you are automatically going to be a C corporation, which means you're going to be subject to corporate tax. And this is one of the forms I often see in my own practice where people that set up a business on their own, they forget to file this form, or they don't even know they have to file it. And then I had one client once, they went online to one of those online business setup companies, and they set up the corporation, but the company never filed this form. And so for 3 years, they've been filing as an S corporation, and then they got audited by the IRS, and the IRS came back and imposed 3 years worth of corporate tax and penalties, all because that form never got filed. Now, we were able to negotiate that with the IRS, and they let us do a retroactive filing. But you don't want to have to be there. It costs a lot of money to fix that problem. So if you're going to be an S corporation for your project, include this form. Also, if you're going to be an LLC can also be treated as an S corporation. I've talked about this in the class already a few times. That's a really common trend that I'm seeing in the business world and small business, are LLCs. I've got a couple of clients that have been an LLC as a partnership for years, but they're going to convert now to be an S corporation. You're still an LLC, but you're taxed as an S corporation, and you have to file this form as an LLC when you do that, when you convert. And it's a real common way I'm seeing nowadays. There's some tax benefits to it, in some cases, not always. So if you're going to be an LLC taxed as an S corporation, you have to file this form. You also have to amend your operating agreement. That gets beyond the scope of this class, though. All right, so for your project, if you're going to be an S corp, I'm going to be looking for that form as part of the documents that you submit with your project at the end of the term. All right, let's switch gears a little bit, and I want to talk about on page 72, the various tax forms that are involved. And I want you to know these form numbers that I have highlighted. So this page has a list of a number of the various tax forms that will need to be filed depending on what kind of business you are. And the first four are, says income tax forms. And these are, excuse me, forms that you file with the IRS. In Oregon, there's also a corresponding Oregon form to report income taxes for yourself individually on a 1040 as an individual income, or if you're a sole proprietor or a single member LLC. This is the form. If you're going to be a C corporation, it's an 1120 form, and an S corporation files an 1120S form. And then partnership files Form 1065. That would include a general partnership, a limited partnership, or a limited liability company that's taxed as a partnership. And we'll talk about that next week, how those different structures. So then I drew a line right here, and then these forms down below are forms that relate to payroll and employment taxes. So the top forms are income taxes. The forms down below here are forms that relate to employment, payroll, independent contractors, reporting of income, and that sort of thing. And I'm going to talk about those next class. So for today, I just want to look at these first few forms, so you kind of have a general idea of how these forms work. So let's look at an 1120 form to begin with. So this is the form for a C corporation. And this has to be filed by the corporation every year at the end of their fiscal year to report and pay corporate tax. So remember, a C corporation is subject to corporate income tax. So all of these forms generally break down in the same way. At the top of the form, you report the income that was generated by the corporation for the year. So gross receipt and sales, returns and allowance, minus that off, cost of goods sold, that equals your gross profit. And then you have, if you have any income from dividends or interest, rent income, royalty income, that's where you would report that. Add all that up, and at the bottom here, you've got your income, that's the gross income. Then down below that, right here, is where we're going to have deductions. So these are the categories of the various expenses and deductions that a business will have during a year. And of course, that's going to be minused off your gross income to arrive at your net taxable income at the bottom. So we're going to deduct for compensation of officers, salaries and wages is a deduction, what you pay your employees. If there's bad debt, if you paid rent, any taxes or licensing fees that you paid, that's a deduction. Any interest, if there are charitable contributions that are made, depreciation deduction for equipment, depletion if you have shrinkage or loss, advertising expense, pension profit sharing, and other type of benefit plan expenses, on down the line. So these are all going to be deductions. So you have your total income up here, and then you're going to minus off these deductions, and then down here on line 30, remember this is a C corporation, you have taxable income. So that's what income will be subject to corporate tax. And then you look up your tax rate, and that's the amount that you owe. So income, expense, tax. Same idea, pretty straightforward. Now what this doesn't show you, this is one page. Behind this page are 100 pages of various different itemizations and schedules for all of those expenses and all of that, and very different schedules that you have to file. I don't go into those in this class. That's a CPA type of thing. All right, so remember, just keep in the back of your mind this taxable income line, because this is a C corporation. Now, next page over, this is the tax form for an S corporation. Now remember, an S corporation is not subject to corporate tax. It's a pass-through. So the profit passes down to the owner, or owners, if there's more than one, and then they're going to pay tax on whatever profit they earn from the S corporation. The S corporation itself does not pay tax at the corporate level. It's all done at the individual shareholder ownership level. But I want to show you how that works. Same idea as previously. We have income that we report, our sales and all that. And that's going to give us our income. And then we're going to have deductions, just like we did in the C corporation. So let's say we had $1 million of income here, and we had $900,000 of expense, which leaves $100,000 as profit, which is called ordinary business income. $100,000, that's profit. Now, that's line 21. I'm going to go back a page. On the corporate C Corp form, it's taxable income. So you see there's a difference in term there. Ordinary business income, $100,000. That's the profit. Now there's no tax that's owed. So here's how this works. This form 1120 is an information tax return. This has to be filed by March 15th of the year. And the idea of this return is not so the corporation will pay tax, but this is to inform the Internal Revenue Service and also the State of Oregon Department of Revenue of the income and the expense and the net profit, $100,000 in this case. This amount then is going to be on paper distributed to the owners of the business. It's called a K-1 form. And that will tell the IRS when the owners file their personal tax return a month later on April 15th, the IRS is going to cross-check this amount to make sure that that's the amount that is also reported on the owner's personal tax return. So this is given basically a heads up to the IRS that there's going to be S corporation profit income on the owner's personal tax return. And they have to match. So if we have $100,000 of ordinary business income, we better have $100,000 show up on the individual owner's tax return 1040 form when they file that in April. So that's why we call this an information return, because it's showing how much profit is going to be distributed to the owners. Now, a partnership return, next page, is called a Form 1065. And this is a form that you would use for a general partnership, limited partnership, or a limited liability company, an LLC, if you have 2 or more owners, unless they want to be an S corp. So most LLCs are going to be using this form if you have more than 1 owner. If there's only 1 owner, then you just file it under regular 1040 form. So same idea, here's our income, here are the expenses, and then here's that same term again as the S corp. Ordinary business income, not taxable income. A partnership is also a pass-through entity. The profits flow through the partnership down to the owners. The owners are issued a K-1 form that tells the owners how much profit they have to report on their individual tax return. And that's the number that's derived from this line 22. And so then the owners will have to report that income that they got from the partnership on their individual 1040 form. So again, this is an information return. It's not the partnership does not pay tax. Now, eventually, that's all going to fold into the Form 1040. 1040 form has various different versions, like there's a 1040 easy if all you have is wage income. But this is called a long form tax return. So 1040 form is when you have much more complicated taxes, like you're going to have deductions for mortgage expense and other type of deductions. You're going to file a 1040. And this is where you're going to report, if you look right here, dividend income, so that would be profit distribution from corporations. And this is also where you're going to report your business income if you have business income from being self-employed, along with the Schedule C, which is, I'm not going to go into that here. So this is where you're going to show that income that you received from the S corporation or the partnership. You're going to report it under the 1040 form, and then you'll pay tax on it at your individual tax rate. So for you in this class, on page 72 again, you'll put a little, fold this page over or whatever so you can access it when you take the final, because I have very specific questions on the final exam where I ask you, which tax form does a partnership file? Answer, Form 1065. What is the name of the tax form for an S corporation? Form 1120S. C corporation, Form 1120. So I'm going to ask you the specific form numbers. Now that'll be a multiple choice type question, okay? So you can just look it up. But be able to turn to this page during the test so that way you can look it up. Okay, I'm going to go into these other forms next week. We're going to talk about payroll and employment taxes and stuff like that because it takes a little bit more time. So